Welcome back to Market Mindset AI. I'm Big Money Mike, your guide to the financial jungle, where corporate giants fight for dominance, interest rates play mind games with investors, and the only thing more unpredictable than the stock market is a toddler with an iPad. Today's show is stacked. Chili's parent company, Brinker International, just crushed earnings. Who knew America loved fajitas this much? Nvidia is feeling the heat from a Chinese AI startup, and the Fed is playing hard to get with interest rate cuts. Oh, and stick around for our stock pick. It's not flashy, but it's got staying power. Let's dive in. All right, let's talk about the broader market before we dig into the specifics. First up, the Federal Reserve is keeping interest rates steady, and Wall Street is collectively holding its breath. Fed Chair Jerome Powell basically said, "Yeah, we're thinking about cutting rates, but don't get too excited." Traders, of course, immediately got excited. Meanwhile, Nvidia took a hit after reports that Chinese AI startup DeepSeek might have found a way to train AI models without needing as many Nvidia chips. If true, that could be a game changer, or just another overhyped tech breakthrough that fizzles out faster than a meme stock. The S&P 500 is wobbling, the Nasdaq is getting whiplash, and big-name investors are debating whether we're in a new bull run or just a very expensive mirage. In short, typical Wall Street drama. All right, let's talk about a surprise market winner, Chili's. Yes, that Chili's. Brinker International, EAT, which owns Chili's and Maggiano's, blew past earnings expectations with a revenue beat of $1.36 billion and EPS of $2.80, crushing Wall Street's prediction of $1.80. How? A combination of killer value deals, smart advertising, and a menu that somehow still includes the triple dipper. Comparable restaurant sales were up 27%, with Chili's itself jumping 31%. That's a serious comeback for a brand most people associate with cheap margaritas and nostalgic birthday dinners. CEO Kevin Hochman said they're building a much stronger business for the long term. Translation: they're not just relying on bottomless chips and salsa to drive traffic anymore. This is one to watch. Now let's talk about DeepSeek, the Chinese AI company that just gave Nvidia investors a mild heart attack. DeepSeek is claiming it can train AI models at a fraction of the cost, which, if true, could disrupt Nvidia's stranglehold on the AI chip market. Nvidia's stock dropped 17% on the news, wiping out a staggering $600 billion in market cap. But here's the catch. This isn't the first time a startup has promised the AI equivalent of cold fusion. The real test: can they scale it, commercialize it, and keep up with Nvidia's pace of innovation? I wouldn't count Jensen Huang out just yet. That said, if you're an investor, this is a great reminder to keep an eye on the AI arms race. It's moving fast, and the winners and losers could change overnight. Let's talk about Starbucks. The coffee giant posted better than expected earnings, which is impressive considering they've been struggling with everything from slowing traffic to union drama. New CEO Brian Niccol, formerly of Chipotle, has been making moves, simplifying the menu, speeding up service, and doubling down on high-margin drinks. He even axed extra charges for non-dairy milk, which has surprisingly brought back some lapsed customers. But Starbucks still has hurdles. China is a mess for them, and the mobile order bottleneck is driving baristas crazy. If they can fix those, this could be an interesting turnaround play. All right, time for the stock pick. Today, we're looking at Crane Company, CR, an industrial manufacturing company that's quietly outperforming expectations. Here's why Crane is worth a look. Earnings growth. Q4 sales jumped 12%, and EPS soared 58%. Aerospace and defense boom. Their backlog grew 23%, fueled by demand in aerospace tech. Dividend strength. They just raised their dividend by 12%, a sign they're confident about the future. Crane isn't a flashy stock, but it's a steady, well-run industrial player with strong cash flow. If you like stocks that don't get talked about much but deliver solid returns, this one's worth considering. And that's a wrap for today's Market Mindset AI. We covered Chili's comeback, Nvidia's AI anxiety, the Fed's rate cut guessing game, and a sneaky strong stock pick in Crane Company. Thanks for tuning in. Stay sharp, stay informed, and most importantly, stay in the mindset. This is Big Money Mike, signing off. See you next time.